This 50-year mortgage is already causing a lot of frenzy, a lot of questions, and a lot of confusion, which is typical when something new rolls out from our federal government. But here's a couple things that I want to go over to see, is it a good thing? Is it not a good thing? And of course, I'm always interested in your comments and your feedback on something that's coming out. For those that do not know me, I am Glenda White. I am here in the Dallas-Fort Worth metroplex, and I have been doing Lende since 2008. So this is not new of something that comes out that sounds so amazing, but be potentially not amazing. So one thing to look at on this 50-year mortgage, the rates on today's loans, 15-year versus 30-year, the rates are typically higher. So yes, will it help buyer affordability by a couple $100s a month? Absolutely, non-negotiable. The payment will come down. Is it going to help bridge the gap in our normal appreciation? The jury's still out on that one. One thing I can tell you is the math does not math. So when you go from a 30-year mortgage to a 50-year mortgage, the amount of interest you're going to pay over the life of the loan is going to potentially double. So that means the more you pay on your mortgage, yes, your principal is going to come down, but your interest is not going to change that much. So on a 30-year mortgage today, you typically pay your interest for 10 years, right? 10 years on a 30-year mortgage. If we have a 50-year mortgage, it could be potentially 15 or 20 years to normalize and to bridge the gap of how much interest do you pay a month versus how much principal do you pay a month. So think about it this way, is when you resell your house in say 5 years or 7 years from now on a 50-year mortgage, you're not going to have a lot of leverage and a lot of gap to bridge on what you purchased it at versus normal appreciation here in Dallas-Fort Worth versus what your interest is not paying down. So a lot of conversations, a lot of we don't know, yes, we potentially know of, yes, it could help investors because they don't really care to pay their mortgage off. They want the lowest monthly payment. Could it help buyer affordability? Yeah, a couple $100s a month. But what it's not going to help is when you resell your home. So I always want to look at the objectives and the possibilities of what happens if you try to resell your home 5 years, 7 years down the road. You haven't paid much interest. You haven't got that much equity. Who's going to pay the shortfall? Where's that money going to come from? So simply let me know in the comments below of what you think. Is it a good thing? Is it a bad thing? I personally don't think it's a good thing. I think you should stay at a 30-year fixed. I think we should also figure out home ownership in a little bit different manner than what it's doing today, because it's not changing. The rates aren't coming down like they thought they were, but it's also the home purchase prices. That's what needs to come down. That needs to leverage it. So again, if you have any questions, let me know. I'm always here for you. But again, I'm interested to see what your feedback is, to see, is it really going to help buyer affordability, or is it just going to throw it and kick it down the curb because y'all, the math ain't mathin'.